maintained. The broader markets are outperforming, up nearly 0.5%. Moving on then to the management of Blue Star. Joining in to talk about the earnings Fineprint, we've got Advani, who's the Vice Chairman and Managing Director, with us on the show. Thanks so much for taking time out. Mr. Advani, the strong growth in Q2 has been supported by the shift in demand. What is the current demand? What is the outlook on the festive season? Are you banking on even beefing up on the current growth that you've clocked in?
Good morning. Thank you for having me. Yeah, it was a great quarter. I think you saw revenue grow about 19% to 1,890 crores. And EBITDA grew quite significantly to 123 crores. EBITDA margin improved to 6.5%, which is where we would like to be and grow from there. You know that Q2 is typically a small quarter for Blue Star, but we were pleasantly surprised with the strong demand after a weak summer. I think you would have seen our segment 2 results. Revenue grew close to 40% and profitability has improved. So while June, July was certainly slow, we saw a pickup in August and September. Moving into you asking about the outlook and for the festival season, demand has been strong even in October, and we're looking forward to a very strong festival season.
You've reported, when you say strong festival season, well, the Dussehra is already over. So what has been the festival season so far?
So it has been very strong, actually. October has been good, better than expected. I think the industry is doing well, and we continue to outperform the industry. So we're looking forward to a strong Q3 as well. You know that we'll be building up stock in the market by December as well. So it is Dussehra, Diwali, and then the build-up for the summer. So it looks like a positive outlook.
This erratic weather pattern this year played a role in how air conditioning sales have moved?
Yeah, absolutely. So you saw it's been a very bumpy ride, right? We saw a strong February, then a cool off in March and April, and then there was a pickup towards the end of the Q1, and then it dropped off again. So it's been very, very erratic, quite difficult to manage supply chain. But as you know, we have insourced and localized a lot of our production. And so our supply chain has actually shrunk from an end-to-end point of view. And so that has helped us manage our inventory and our receivables much better than we would have in such a volatile demand environment. But I do want to point out that while the weather has played havoc on demand, from an overall demand point of view, the outlook is quite steady. Consumers want to own an air conditioner. They need to own an air conditioner. And it is the item of choice, as and when they come back to buy. So from a long-term trajectory point of view, what we've been saying, which is that we're at an inflection point as far as the industry is concerned, we're very much in there and living it. Of course, the summer may throw some surprises at us every quarter.
When I speak to the entire sector per se, when I speak to some of your peers, they've been sharing the following, that look, inflation is high and consumer durable demand has been low. What you're telling me is a welcome delight and quite a surprise. So can I say that the consumer durable demand has bottomed out, or it's only applicable for Blue Star?
So if you look at Q2, we grew about 40%, but the industry grew 30%. So I would not say that, the industry isn't growing. I think it's definitely growing. The outlook for the next couple of quarters is also good as far as the industry is concerned. So I would say perhaps that, not talking about the overall durables industry, but about the air conditioning industry, I think that demand continues to be strong. You, of course, know that we have a very large B2B business as well. And I'm happy to tell you that demand on that front has been strong as well. So we continue to see inquiry levels at a very high level. We continue to see order inflow very strong. So I think it is the whole air conditioning and refrigeration sector and industry that is doing well.
Fair enough. There was a bit of a slowdown as well and delay of order finalizations in the commercials building sector previously. Has that continued? Has that stabilized now? What's the outlook?
Yeah, so we'll talk about segment 1. As you know, it's a large segment for us. You saw about a 12% growth in revenue, and margins were flat at about 6.1%. So what's happening there is that it's largely positive, but I'll just throw some more color on that. The commercial real estate market has been slow. We also are not too keen to add orders in that segment because we've been seeing challenges around cash flow there. So as a company, we have redirected our marketing efforts into new verticals outside the commercial real estate market. So that's as far as our projects business is concerned. Our commercial air conditioning equipment business, I think there we continue to serve the light commercial retail markets across the board. So I think from an equipment point of view, demand has been strong across even in government buying as well as in infrastructure. So I think it's just the projects business where we're a little cautious about cash flow in the commercial sector that we're seeing a little slowdown there.
Now, my next point is that you've raised capital, and I've had the business of I've tracked Blue Star for years now. They've never raised capital, but couple of months ago actually, you've raised capital. Why have you raised capital? Because in your history, you've never raised capital, but you've suddenly raised capital.
Sure. So thank you. So, it is a once in a generation fundraise. I'll say that. And the reason I say that is that we've raised 1,000 crores from marquee investors just last month. We did that because as I mentioned, we are at an inflection point as far as the air conditioning and refrigeration industry in India is concerned. There has been a push by the government to localize and indigenize, as you're aware. There's a PLI scheme that was announced, and there have been import duties that have been raised in our industry. So we have demand growth on one side, we have a supply constraint from imports on the other side. And so it is essential if we want to participate in this expected growth that we anticipate, that the company makes suitable investments in the back end. So what do I mean by that? Investments in R&D, both in people as well as product development and testing infrastructure. So there's a big piece there. There's investments in manufacturing. We're growing our capacity quite significantly, not just in room air conditioners, but in deep freezers, in commercial air conditioning equipment across the board. So there's manufacturing capex required. Our business is becoming far more electronics intensive. And so there's a big investment required in digitalization, both of the product as well as our processes. And of course, we continue to spend on the brand. Now, the brand, of course, will be funded through internal accruals, but from a capex point of view, it is manufacturing, R&D, and digitalization that we anticipated we need money for. We could have funded it through bank borrowings and internal accruals, but I think there would have been a mismatch between when we required the money versus when the returns would come. And so not wanting to stretch the balance sheet too much and looking at the global uncertainty of the financial markets, we decided to raise money ahead of that. So we're extremely happy that we've done it. We did it at a good valuation, and we're very confident of giving very handsome returns to our new investors.
Great to have you on the show. Thanks as always for taking the time out and speaking with us.
Thank you.
Okay.